Silver is cheaper than dirt. You may have heard me say that a few times in the past, and it's actually not quite true. It's almost the same cost as dirt. I'm going to show you, you need to watch this video first, how it's made. Silver Bullion is the name of the video. But in this video, you'll see this is a First Majestic silver mine, and how they actually mine and get silver refined so that they can send these silver doré bars. A doré bar is like somewhere between 90 and 98% silver to the refineries. Anyway, at this First Majestic mine, they show you some of the stuff down in the mine, and then all of this dirt that they have to move, the ore that comes out of the mine, and then the process of crushing. And they crush it from the giant boulders into large rocks, into medium-sized rocks, into smaller rocks, into pebbles, and finally it gets crushed into dust and then mixed with water in this big pond. And they add some acid to the water that then leaches the silver out of the rest of the minerals, and all the rest of the dirt falls to the bottom of the tank. And then they put that through screens that filter the water, and the sediment on the screens has a high silver content. And they put that into ovens and melt it. And here they're just doing a little sample of the ore that came in. And they pour this little tiny ingot, turns into this little lump of silver, and then they take that little lump, and here is that little lump right there on the counter. This is a ball-peen hammer, a regular hammer. You can see the size of the guy's hands. So this is a little bit bigger than the end of his thumb. And then they take that and mash it into a little cube. Again, you can see it's this thumb, and they put that in these little crucibles, I think they're called, and put it in another oven and with a chemical in it that allows all of the other metals to burn off, but it does not allow the silver to burn off. And there is what is left of that big truckload of ore that came out of the mountain, and then and we had that sample that's reduced to that little tiny chunk that was about an inch, a little less than an inch cube. And here we have this little tiny pebble of silver. The point is that there's a lot of work in refining silver and getting into a bar or a coin. A tremendous amount of work. Now I'm going to show you the CPM Silver Yearbook from 2018, and there will be another one coming out very shortly for 2019. But what I'm going to show you probably has not changed. It's probably pretty close. I'm going to do a little word search here now so that it jumps down to the page that I want, and the word is sustaining. Silver's all-in sustaining cash cost. Now, sustaining, let's jump back up to this page. They've got the cash cost, but then they've got the sustaining cash cost. Sustaining is where the company that's mining it doesn't go out of business. It is sustained at this level. It's not making a profit, and it's not going out of business. And that $12.50 to $14.50, but when you go to this other page here, it's talking about silver all-in sustaining cash costs for the 90th percentile. So 90% of the mines out there that are primary silver producers for primary silver production seems to be around $15. Well, that's really where silver spot price is right now, just above $15. So it's right at the point where the mines can break even and not go out of business. That says that there's pretty much a floor under it. If silver goes down much, then some of these mines get mothballed, some of them go out of business, and that means that the supply of silver dries up in the future, which would have to drive up the price. What we're waiting for here, what I'm waiting for, is monetary demand for gold. And in my last video, I showed you that central banks have been accumulating gold, that the Basel III agreement is being implemented, and they've made gold a Tier 1 asset, meaning it has zero risk attached to it. Now, that means that they are not expecting gold to go down a lot. If it's collateral that has zero risk, it's collateral, where the value of the collateral will not evaporate. And I did show a chart of the various central bank reserve assets, and that gold is a little bit more than 10% of the reserve assets, and then the other 88% or whatever it is made up of all these other currencies. And you know, one day, there's going to come a day where that, if you imagine a central bank like a dumpster, and you tell the central banker, the chairman of the central bank, if you compare him to like a homeless guy, and you tell the homeless guy that there's a pair of shoes in that dumpster that fits him, and he dives in and he's got to wade through all of this other trash, all these Burger King wrappers and Coke cans and all of that stuff to find the pair of shoes. Well, that's what all this other currency is going to be compared to gold. And when that day comes, the gold-silver ratio will change vastly, and silver will outperform gold vastly. And, you know, in that previous video, I was saying that the reason that central banks are accumulating so much gold right now, and the reason that it's been redesignated to a Tier 1 asset, is simply because they are getting ready for the next big crisis. And they want to be in a position where they can survive the next big crisis. And that survival depends on gold. And silver's value, when it finally soars and way outperforms gold, depends on gold and silver having some monetary demand, people rushing back toward them. And I don't think that day is too far in the future. Thanks a lot for listening. If you got anything from this, please like it, share it, click that little alert bell, subscribe to our channel, and if you could, subscribe to our newsletter too. You'll get alerts and you'll get information much earlier if you do that. Thank you very much for listening. Bye.